Health insurance is very, very important because of the cost of healthcare in India. It is very, very important that everybody has a health insurance with a very good coverage. Taking a 2 lakh, 5 lakh coverage will not be enough. For these, you must have reserves. You shouldn't be asking somebody for money. You must not be borrowing money for your own expenditure. Tell me, for an investor, it is 20% knowledge, 80% mindset. You should give money time to earn money.
Yeah.
That is a very good line. I learned it from one of my very senior gurus. You need to give time for money to earn money.
So because when you deal with money, it's all about emotions. Because
Exactly.
you earn money, and if you want to like put it into somewhere, it will always be scared, like
If it goes away.
if it goes away. So that is the mindset I think majority of people have.
You buying things on an impulsive mindset. So stop
Very well said.
impulsive purchases.
Stock market, and for young investors like us, like obviously like you start investing now and you see the market is falling, it is like a tension, bro. Like
When I meet a few parents also, they keep telling these kids, they don't listen, they started earning, they are not investing in all those things. But the first misconception every youngster who has just started earning has is, I will start investing when I earn more.
Yeah.
That is the biggest misconception that every youth, even for me, when I started my journey, I knew I had to invest, but my mindset is when I earn little more, let me start investing. If my income level raises by 5%, I'll start that investment. That is the biggest misconception.
Yeah.
So first of all, I have a finance related account. There is fin.harshit. You'll find me on Instagram at this point. And on LinkedIn, I'm Harshit Govindas. You can message me on LinkedIn also. And otherwise, as a firm, we are Kaveri Associates LLP. You can find us on Google and all social media platforms on Instagram, Facebook, LinkedIn, Twitter, on all platforms. We are pretty much active and we will reply to your messages immediately. And on Google, we also have a call action button. You can call, even on Instagram, you can call us and contact us.
Yeah. Okay. Hi Harshit, welcome to Old Monk Radio, bro. ಹೇಗಿದ್ದೀರಾ?
ಚೆನ್ನಾಗಿದ್ದೀನಿ bro. ನೀವ್ ಹೇಗಿದ್ದೀರಾ? How's everything there?
It's going great, bro. It's going great. I'm really good. Thanks a lot for making time, to sit down and talk to us. At this point, I think in my life or in everyone's life, we need a person like you, like to guide us. What is the right thing to do financially and stuff?
I think,
Right,
first thing, what I want to tell in this podcast is Old Monk Radio is doing a fantastic job. Usually, all podcasts bring in elder people, very experienced people. There is an age gap between the audience and the guest. Here, it is the guest and the audience is in the same age gap, in the age group. Sorry.
Yeah.
So it is a great thing that we have to do.
Yeah, that's amazing, bro. So basically, the agenda to get you on the show is I've already spoken to you about it. But I just want to get this mindset of investments or financial planning into people like us and in our age groups, like 20s or early 30s. I just want to give them an idea of how financial planning works and what are the things involved in it, right?
Okay.
So I think there is no other better person than you whom I know. So I just wanted you on this show. Yeah.
Honor.
So we'll just start off. Like, can you just tell me about your journey in financial advising world, bro? What drew you into it, and how did you start, and what do you basically do?
Okay. So financial advisory was something I wanted to do. I decided when I just finished 10th. When I finished 10th, I decided I'm going into financial advisory itself. And already my father was into this business, insurance and investment business. As a financial planning whole, we were doing the process, but it was not coming under financial planning. Right now, we have moved into a phase where we do complete financial planning for families.
Okay.
And I started getting trained for this from my 11th standard.
Amazing.
And a little earlier also, maybe, because some cases I would hear what dad used to speak and I used to know a few things. But later, once I started concentrating on this, I used to listen to a lot of things that is happening in the industry. Industry insights are more important than what we learn on the book or we read elsewhere. So when I heard about industry insights, it became more interesting. And further, when I came to degree, he started introducing me to his colleagues and other peers so that I learn more from those people. And for me, a turning point was just after degree, I didn't work anywhere else. I started into financial advisory itself.
Lovely.
So that was a great advantage for me. And I used to go along for meetings with Dad, and he has a different knack of advisory and bringing in a fresh perspective with what experience and knowledge that I've gained from a different world had become an advantage. So all put together, this journey has become wonderful until now. It's almost 7 to 8 years now. In the financial advisory world, but every client is an experience because every client has a different need. Some have a lot of liability, some have a lot of excess money that they've not invested. So everybody is searching for a solution, and we are very happy to bring in so many solutions under one umbrella.
Yeah, that's amazing, bro, and very interesting. In fact, people choosing this path is very rare, in India. Since you told me how your dad was into this field, and obviously you got through into it, and you're doing an amazing job, bro. Honestly, yeah. So as I told you, the main agenda, to just develop a mindset for people like us, basically, about financial planning and stuff. So I have a very interesting question, bro. What do you think is the biggest misconception about money? What people like us, like 20s or early 30s, have? What do you think?
This is a very common question. When I meet a few parents, also they keep telling these kids they don't listen. They've started earning. They are not investing in all those things. But the first misconception every youngster who has just started earning has is, I will start investing when I earn more.
Yeah.
That is the biggest misconception that every youth, even for me, when I started my journey, I knew I had to invest, but my mindset is when I earn little more, let me start investing. If my income level raises by 5%, I'll start that investment. That is the biggest misconception. And second thing is, I don't need insurance. That is a big misconception. Everybody needs insurance. I'm not talking particularly on life insurance as such. There's health insurance, and there is a very big gap in the knowledge between the investors and the financial institutions on personal accident and disability insurance. There's something which people don't talk. So take for example, you're working in a company, you meet somebody met with an accident, and they're not able to work for 30 to 45 days. Who is going to compensate your income?
Yeah.
So if you have a disability insurance, there is an inbuilt cover where the insurance company pays a certain amount for you to compensate that financial loss. Same way, life insurance, if you don't have dependability, it's not necessary. But at least when you're 30, you'll have to go for life insurance so that your cost of insurance is lower. Otherwise, health insurance is very, very important because of the cost of healthcare in India. It is very, very important that everybody has a health insurance with a very good coverage. Taking a 2 lakh, 5 lakh coverage will not be enough.
Yeah.
So having all these points are the misconception. I don't need insurance. I will invest when I get more money. These two are very common in everybody who is between 22 to 30.
Yeah. And what do you think, bro? Like, since you already highlighted, people earning less are, thinking twice to start investing. What do you think is the kind of mindset, we have to get, or what do you think is the first thing we have to do, like to, dive into this world of investing and, doing things with money?
First, first you have to set a mindset. You have to shift your mindset in such a way that, take for example, somebody is earning 20,000 per month. That is his first salary.
Okay.
Before his first salary, was he earning anything? It was zero, right? His income level was zero. You have 20,000. You have to shift your mindset from I am earning only 20,000. Instead, I am earning 20,000. Let me start investing. That is the first mindset. But first to third month, you shouldn't invest. This is a
Okay.
very strange advice. Everybody tells start investing from the first
Right.
month
First
of your
month.
earning, but I recommend first to third month, don't invest. You want to spend it. You want to keep it in your savings bank account, keep it. But
Yeah.
you must understand how you want to spend your money and how you spend. If you make a mistake or overspend, you will learn. If you
Yeah.
save, you will understand your capability on how much you can save every month. 3 months,
Okay.
you must give yourself that freedom. Okay, I'm earning, let me spend. And some cases, you might always want to spend on something. It might be a dream gadget, or you would want to buy a accessory or a kind of dress or drip you want to buy. So for that, you spend those first 3 months. Later, you analyze what is your spending, how much have I spent, should I spend this much on this, and then decide where to invest, how to invest. And first, you have to have a reserve fund.
Okay. What do
That
you mean by
that
reserve fund, bro? What do you mean by reserve fund?
take for example, there are different scenarios where there might be a income gap. That is when there is no income flow. First, very positive reason might be that you are under notice period in your company, and 2 months, if it is a 2 months notice period, 2 months you won't get your salary.
Okay.
How do you manage expenses or EMIs? That is first. And second, there might you want to take a break from your employment, maybe 1 month, 2 months, or 3 months. You must have enough reserves to maintain that. Not only
Yeah.
for your expense, even for your EMIs. That is very,
Okay.
very important. How much reserves you maintain is very, very important. That is what I
Lovely.
mean by reserve funds. Otherwise, it might be any emergency situations. You have a small hospitalization, you want to go to the hospital, you have some major commitment in your family, or you have to go to a wedding, very close family. You have a different size of expenditure in that month. So
Okay.
for all these, you must have reserves. You shouldn't be asking somebody for money. You must not be borrowing money for your own expenditure.
Okay.
Basic necessities must be covered with your reserves itself
Okay.
when there is a gap of income.
Okay, fair enough. And like how do you think, bro? Do you want to suggest a simple, budgeting method which actually, works for people with limited income? Since you told reserve funds, and for example, say a person is earning like 25 or 30 grand per month and we just
Okay.
started working. Okay. And how do I build a reserve fund for myself?
Okay.
What do you think is
So
the best mindset to have?
this is a little complicated. It goes case to case, but there is a thumb rule. You decide how much to spend on each thing. Take for example,
Okay.
you don't live with your parents. In India, most of them live with the parents. Very rare cases where they
Yeah.
have to go to a different city and live by themselves. You decide rent. If I have 30,000 rupees, I have 5,000 or 7,000 is the rent I have to pay, or 10,000 I have to pay from
Okay.
my own pocket. You decide more than 10,000, I don't go. I don't choose a house that will cost me a rent which is about 10,000.
Okay.
And for my groceries, I don't spend more than 3,000. If I go out
Okay.
on weekends or on
Okay.
weekdays or go to a party with my friends, I don't spend above the spending limit. You fix
Okay.
a top level of spending. If it is
Okay.
3,000, 5,000 on any element, and you don't cross that line. Once it touches that line, you stop, no matter
Okay.
what,
Okay.
until and unless it is very necessary. Groceries, sometimes you can't stop
Yeah.
that, right?
How
It
do-
is a daily need. If you want to buy milk, you have to buy milk. You can't stop that. Such things,
Yeah.
fine. But
Okay.
other things where you can limit, you must put a strict
Okay.
line there. You shouldn't
I
cross
think,
that line.
yeah, I think like hearing you tell this, right, I think, discipline and, the mindset and the urge, to
Correct.
spend everything has to be in line with, your life. That's when I think
Mindset.
all this kind of mindset or everything will fall into place,
Correct.
Yeah.
What happens when we see money in savings bank account, and your friend or somebody tells we'll go here, and you're in a place and it is very close by, you want to go, you must develop a mindset that no, this money is for my reserve, I'm not using it. You should develop that mindset. You should tell, maybe next time. You should be kind enough. You don't have to be strict and like an army officer. No, dude, I spent everything. I can't do this. You be humble. You know what is your finances. Your friend might have a different income level.
Yeah,
Or
yeah.
when you're suggesting to go somewhere, your friend might have a lesser income level. You're
Yeah,
asking them to go to a place where it has a different standard of living or different standard
yeah,
of
yeah, yeah.
spending. So we must be very
Mm-hmm.
diplomatic.
Yeah, yeah, yeah.
That is the word when you are choosing things.
Hmm. Okay, crazy, bro. I think, yeah, bro, you put a lot of points together, bro. I think you covered, the aspects of why, investing or savings is required from early stages and stuff, right?
Correct.
So, like, do you also want to add on, the methods of, investing, bro? Like, for example, say I have a minimal income, and what all places or what are the possibilities I have to look at into investments?
See, first thing is you must have a SIP.
Okay.
Yeah.
Mm-hmm.
That is or market risk related itself.
Mm-hmm. Mm-hmm.
That is like a basic. You start an SIP with maybe 1,000 or 2,000 and start make it grow. Because
Okay.
take for example, you're 25 years old. You start a SIP of 3,000 rupees per month, as low
Okay.
as 3,000 rupees. I'm telling you. Most of them can afford in India if
Okay, yeah,
they are
yeah.
employed, because the minimum wage is itself 14,500 today.
Mm-hmm.
So if they invest 3,000 rupees and they get only 12% returns, by the time they're 50 years old, they would have accumulated 50 lakhs.
Okay, fair
Where
enough.
they
So
would have been.
it is like 25 years. Say for example, I
Correct.
started at 25, bro. But honestly, right now I'll tell you, with people's mindset, right after COVID has
Correct.
changed, everyone are like with instant gratification.
Yes.
Like eagle result ಬೇಕು ನನಗೆ, no one has
Correct.
patience. And
Yes.
like developing this kind of like a long term mindset. Okay, 25 years every month. Okay, the 3,000 is not a big money as you told. Like,
Correct.
basic income you'll be able to put, but the commitment of 25 years, right? I
25
think
years
that
is scary.
yeah, that is scary, and that is where people are like, ಅಷ್ಟಿನ ಬದುಕ್ತೀನೋ ಇಲ್ವೋ ನಾನು, ಆ ತರ mindset ಅಲ್ಲಿ ಹೋಗ್ಬಿಟ್ಟಿದ್ದಾರೆ. What do you want to tell for this?
So this is a very typical question we get.
Yeah.
But the funny part is the average longevity in India today is 85 years.
Damn.
85 years. And people want to retire at 40.
Yeah.
What will you do the rest of 45 years? So
Yeah.
it is very funny when people tell, I want to retire by 40. Okay, you retire by 40.
Okay.
What will you do the next 45 years? No, I'll start a business. If you're starting a business, you're not retired, right? How can you define it as a retirement?
True.
So it is a taboo. I call it a taboo that
Fair enough.
young people want to stop working early because when they start, right, they're a entry level executive or a fresher. They find it very challenging. That is when they develop this mindset of, I want to retire early. So what happens? They keep thriving on, I have to retire, and they don't enjoy the job. Neither they don't enjoy the money they earn from the job.
Yeah.
See, again, it is again mindset. So whenever I talk about investments, I keep telling my investors, they keep asking, how did you learn this? How did you learn that? I keep telling, for an investor, it is 20% knowledge, 80% mindset.
Yeah.
So coming back to the point where I was telling they can accumulate 50 lakhs, same thing if you start at 30 years age, when you're 30 and you want 50 lakhs, when you are 50, you will have to invest 5,500 rupees every month. So the difference here is, if you start by 25, you invest only 9 lakh rupees in the whole 25 years. Otherwise, you will invest 13.2 lakh rupees. See the difference. 4.2 lakhs, there is a gap. For a beginner, it is almost 1 years of pay. 1 year of pay. So you can save that money, and you will understand the power of compounding only in the long term. You can't experience the power of compounding in the short term, right?
True.
You should give money time to earn money.
Yeah.
That is a very good line. I learned it from one of my very senior gurus. You need to give time for money to earn money. This is a very nice thing I learned.
That's amazing. Also, when you were telling about the 25 years of, for example, say I start investing 3,000 rupees, right, from this month. Okay, so is it like I have to pay 3,000 for entire 25 years? like every month, or is it like I pay for a few years and you, as you told, the compounding and the money works for money, all that will happen? How is it, bro?
Even that can happen. See, there is one way we can do it. All 25 years I invest and I wait till the end of 25th year. Or you can invest for 15 years and let it stay in the market. And it will keep operating and giving you returns.
Okay.
Or there is one more way to do it. You have a lump sum amount. You invest in some saving plan and there is a payout that comes out after maybe 5 years. Maybe you invest in a unit linked insurance plan and after 5 years it has good returns. You take that money out from there and invest it in mutual fund. In mutual fund, you're getting it diversified. In ULIP, there is a cost of fund management charge and other things. So you want to save that money, you put it in a mutual fund and it will continue to operate. And the advantage with mutual fund SIP is you can stop anytime and and let the investment continue to operate in the financial market. And there is also an option now that most platforms have introduced a pause option. Maybe for 3 months you can't invest. You can pause it.
Okay.
Right? And
Amazing.
there is another option where you can stop and withdraw it immediately. But there are a few funds where equity linked savings scheme, there is a 3 years lock-in. But all equity funds don't have a lock-in period. There might be an exit load, but if it is an emergency, you will stop it, right? So you shouldn't be worrying about the exit load of 0.1% or 1%.
Yeah. And also, bro, see, like, since you're explaining, very precisely, bro, you are like telling me on point. Since I'm talking to you, I'm able to understand in depth of how these works. Okay. See, for example, I'm a layman who don't know about all these, bro. Since I'm talking to you, I'm, getting an idea. Okay. If I talk to people like you, and I'll get little confidence. Okay, this will work. Okay, there is something like this also. How do you think, like how do people find the right person or the right person like you, for example, to help them out, understanding how to make their money work, or to start saving, getting into SIP or mutual funds?
Okay, this is a very challenging thing even for as a financial advisor. See, financial advisors are there. There are very good financial advisors, but it is very difficult to find because we usually don't promote ourselves much. And second point, it is very difficult to search us on the web because there are so many of them. You don't know whom to trust. So even for us, when people check us out on Google, they see all the reviews and then they come to us. They want to discuss in detail in the first discussion. Our first discussion goes up to 2 hours sometimes, and there are few cases where it has gone up to 4 hours also.
Damn. Okay.
Because maybe they're older and they have a lot of liabilities. They already have some investments that is going on, and we'll have to map everything and see when there is a payout and how much they're investing, what is their income level, what is their expenditure level, how much insurance they must have. All these things we need to consolidate. At that time, it is a little longer. Only after all these analysis, they understand that, okay, this person is trustworthy. So people don't have the time to invest, to go to multiple advisors and get that recommendation, right? That is a very difficult thing. And financial advisors are required. See, take for example, when you are investing in a small amounts, okay, if you have a little knowledge, it is good. It is like going to a doctor. Take for example, if you have a cold or a cough, you take self-medication. You go to a pharmacy, you tell I have cold, you get a medication. But if you have to undergo a heart surgery, will you look at YouTube and learn it?
No, definitely
no. Right? So you have to have a doctor. Same way you must have a financial advisor, nothing but a financial doctor.
That's very well said, bro. That's very well said.
All these are things I've picked up in my journey. So when somebody asks, why should I need a financial advisor? Everything is available in the web. And now AI is playing a very major role in recommending things for various things. But you won't have that personalized care. See, there must be a balance. See, when you are doing your finances, there is an emotional thing and there is a practical thing also. So when there is an emotional barrier, right? The amount of emotional barrier is very high when it is your own finances.
True.
When there is a third person that is a financial advisor like us, the amount of emotional value we give will be little lesser. Obviously, we should consider the emotional value. Otherwise, we can't talk insurance and how much coverage is required and why it is required. We can't give you an understanding on how much requirement of insurance, how much requirement of investment in which financial instrument. So we strike a balance. See, if you have to achieve this financial goal, you have to go through this financial instrument. If there is another financial goal, it is a different thing. For short term, you can invest in different financial instruments. For long term, also you can invest in. There is we can map it easily, because otherwise, if you're doing your own finances, it is a little
the
tough.
emotional part. Again, I think you highlighted a very good point here, bro, because when you deal with money, it's all about emotions. Because
Exactly.
you earn money, and if you want to like put it into somewhere, it will always be scared, like
If it goes away.
if it goes away. So that is the mindset I think majority of people have, bro. I
Correct.
also have an interesting question, bro. Do you want to like talk about the conspiracy or the myths of what people assume mutual funds or mutual funds or SIPs are? Do you want to talk and break it?
So a lot of financial advisors, especially there is a segment of advisors who are not connected to the financial market, who have very minimal knowledge on the financial market, who will be working on bonds and debentures and safe instruments, which are not connected to the financial market, who keeps telling, ಸರ್ ನೀವೇನಾದ್ರೂ ಇದ್ರಲ್ಲಿ ಹಾಕ್ಬಿಟ್ರೆ ಮ್ಯೂಚುವಲ್ ಫಂಡ್ ಅಲ್ಲಿ ಲಾಸ್ ಆಗ್ಬಿಟ್ರೆ ಏನ್ ಮಾಡ್ತೀರಾ? There, it is a good question. So if the fund is under loss, there is always an opportunity to wait for it to come up. So there is a thumb rule again. If the market falls by 10%, the market will raise by 15%.
Lovely.
Usually, when you look at the charts, usually there is a high chance that whenever the market has fallen by 10%, it has come up by 15%.
Okay.
So we saw the COVID crash. After COVID crash, what happened? Where the market has risen to? So we must understand, it is not that the market will always be in a low; it will keep going under loss. Maybe 1 year it might be down, 2 years it might be down. The third year it is coming up, right? And when it comes to unit-linked insurance plan, there is one myth that on the day of maturity, if the market is down, you will undergo loss. Take, for example, you're going for a unit-linked insurance plan where you want to invest only 10 years. Go for a term of 15 years. Pay only 10 years. The lock-in is 5 years in unit-linked insurance plan. After 5 years, don't pay. It will continue it keeps growing.
Okay.
And take, for example, 10th year, your financial goal is due. And 10th year, the market is down. Don't take away that money. Let the market come back. After which you can redeem the funds. Same way even in mutual funds. So you must have the capability to wait maybe 1 year or 6 months. That correction phase you must be able to handle. Again, coming back to the main point, state of mind.
Totally.
So you must not panic. You must not panic. For new investors, it is very it is easy to panic. There are cases where we have also panicked during the COVID crash. We panicked a little as financial advisors also. But later we came to an understanding and we understood the situation and how the market can come back. And what are the advantages? How digitalization will push the Indian economy, Indian share market. All these things we keep analyzing. Every day it is our job. So when you have a financial advisor, again, when you panic, you can call your financial advisor and ask, the market is crashing, what else is it about? Then we will give you some hope and we will tell you how practical things on how the market will come back.
Okay.
So people shouldn't worry about that.
See, bro, I think that is a very strong point, whatever you told me, bro. Also, like adding on, to find, a trusted financial advisor. See, right now I know you personally, bro. Like,
Correct.
for
Yes.
example, tomorrow if I want something, some financial help or something, if I call you, you'll be there for me, because that trust,
Correct.
and that I have, the trust on you. I know you personally also. And since in this era there are a lot of people advising on finance, like internet is at the fingertips on the phone,
Correct.
and there's a lot of information about how to do your finances, how to not do, what are the mistakes and stuff. How do you
Correct.
think a person has to choose a right financial advisor?
Um, this is whatever I'm going to tell will be a little problematic for financial
No,
advisors
yeah.
who is just coming into the market. Easier easier way is check the Google reviews and listen to read what the current clients are telling. That is a very
Okay.
good point, where you can understand. And second, you meet the financial advisor without any obligation. The financial
Okay.
advisor must be ready to talk to you without obligation that they have to give the financial advisor any kind of business.
Okay.
Be it you must start an SIP, or you must invest in a bond, or you must invest in a insurance plan, or take a health insurance. Without any commitment, is the financial advisor ready to discuss with you? It might be on a chargeable basis or on a free basis. What we do is free financial advisory, but
Okay.
there are financial advisors who charge. But they must be ready to discuss without any commitment. You must make it a point that when you call them, you must tell that I'm not sure whether I'm going to invest, but I want to have a discussion with you and listen to what you must say. Once I am happy and I am comfortable, you can start investing.
Okay.
I can start
Fair
investing.
enough.
Sorry.
Fair enough.
And there is another way, another very important point which I want to tell financial advisors. Don't expect all your clients to invest through you, or don't expect as soon as a client walks into your office to invest, because they might have different commitments, or they might be
Yeah.
discussing with different financial advisors whom they find more comfortable to invest in. Maybe, see, they might take some points from you and alter the financial plan with the other financial advisor. You must be happy with that, right?
Yeah.
Obviously, your living might
Yeah.
become difficult, but
Yeah.
it's fine. You must be open to it. When you're open, more clients come in and they will feel more comfortable to discuss with you.
Yeah.
So both the ways, client ways and the financial advisor ways, they must not discuss with any commitment that I will start investing today.
Okay.
Give it time. You must gain that faith with the advisor. Then you will automatically have trust on them.
Yeah, I think it's a very well put out, bro. I think it is a very valuable insights what you gave on how to choose a financial advisor and stuff. So going on, bro, I think we have set a foundation of the investments, and what are the kind of investments we have. We have spoken about SIPs, mutual funds, the conspiracies and stuff. So
Correct.
like going ahead, like what is financial freedom, bro? Like how do a person for
Okay.
example, I'll take my example. See, I'm from a middle class family, and like what it is like, bills to bills for me, bro. I
Correct.
earn, I
Yes.
pay, I earn, I pay. That is how my life is, right? And
Correct.
for me to get into financial freedom, I have a goal. As you told, right now in this era, everyone wants to be financially free by the age of 35, 40. Okay.
Correct.
For me to get being a middle class guy and being bills to bills living every day, what do you think I have to do for getting into that financial freedom sector?
Okay. So financial freedom is again a very complicated term.
Complicated.
For some of them, me going through the month is a financial freedom. For some
Yeah.
of them, me having reserves and also getting through the month is financial freedom. For another set of people, me having no liabilities is a financial freedom.
Yeah.
No EMI spa, ನನಗೆ EMI ಇಲ್ಲ ಅಂದ್ರೆ ನನಗೆ ಖುಷಿ. That is one kind of financial freedom.
Yeah.
The other kind of financial freedom is I have enough accumulated wealth. I don't have to work tomorrow. That is another kind of financial freedom.
Yeah.
So for everything, there is the only solution is for you to work and invest. That is one point. And second point, for beginners who are 20s, who are in the 20s, to stop impulsive purchases.
Yeah.
So what happens? You're scrolling through any website for that matter, or any app, you find it nice and you want to buy it, you
Mhm.
add it to the cart
Mhm.
and you check out because you
Yeah.
have money in your savings bank account.
Yeah.
So I learned it from a very close friend how to
Mhm.
do this. This is not from
Mhm.
any book. This is
Mhm.
from my closest friend who told,
Mhm.
Arshit,
Mhm.
ನೀನ್ ಏನ
Mhm.
ತಗೊಬೇಕಂತ ಇದೆಯಾ, you want to buy something,
Mhm.
put it in the cart,
Mhm.
wait for 1 month.
Okay.
Don't buy it. Wait for 1 month, then again
Mhm.
go back, check
Mhm.
that same article, whatever it might be,
Mhm.
a shoes or a shirt
Mhm.
or
Mhm.
even a pen for that matter. Sometimes
Mhm.
I like
Mhm.
to buy pens.
Mhm.
I like stationery. So
Uh-huh.
I check.
Yeah.
After you check, do you
Mhm.
really need it?
Yeah.
If you
Yeah.
don't
Yeah.
need it, put it away. Don't even put
Yeah.
to the
Yeah.
wish list. If it is in the wish list, next time you open that app,
Again.
you will
Yeah.
add it to the cart,
Again.
and it is a
Yeah.
cycle. You keep checking it.
Yeah.
So
Mhm.
stop impulsive purchase. Even if, when you
Mhm.
go out, you see a
Mhm.
thing which is very attractive.
Mhm.
Shops are meant to be attractive, so
Yeah.
you don't get into that web and keep
Mhm.
purchasing, right? Because
Mhm.
rich people are becoming richer by
Yeah. Yeah.
you buying things on an impulsive mindset. So stop
Very well said,
impulsive
bro. Yeah. Yeah.
purchases,
Yeah. Yeah.
and don't delay investing.
Yeah.
If you and see,
Mhm.
there are flexible financial instruments. Even if you have
Mhm.
1,000 rupees extra end of
Mhm.
the month, you can add it to
Mhm.
your funds.
Mhm.
Why are
Mhm.
you keeping it in the savings bank account? Why are you
Mhm.
delaying your investment by telling,
Mhm.
no,
Mhm.
next month I'll invest? ಇಲ್ಲ ಈ
Mhm.
ಮಂತ್ ಇಟ್ಕೊಂಡಿರೋಣ, ಏನಾದ್ರೂ
Mhm.
ಖರ್ಚು ಬಂದ್ಬಿಟ್ರೆ, if I get
Mhm.
some
Mhm.
expense, what do I
Mhm.
do? That
Mhm.
why are you anticipating a additional
Mhm.
expense?
Mhm.
You have reserves for it. First create
Mhm.
a reserve fund,
So yeah.
then stop impulsive purchases, and
Mhm.
then start
Mhm.
investing. All these three
Mhm.
must happen simultaneously.
Yeah.
See, you can't keep waiting for your reserves to come to that level and
Mhm.
then start investing. It must happen simultaneously. Maybe 10 to 20% of your investable funds you
Mhm.
keep it for your reserves, and
Mhm.
the rest of 30 to 60% you invest in different instruments, and
Mhm.
some of it you spend it on your insurances, maybe health insurance, term insurance, or disability insurance, or some saving plan of such, maybe RDs for
Yeah.
short
Okay.
term
Already.
needs, or
Mhm.
maybe in your mutual fund liquid funds
Mhm.
where it is
Mhm.
nowhere connected to the financial market,
Mhm.
very
Okay.
less exposure, maximum
Mhm.
5%. So you
Mhm.
can park your emergency fund in your liquid
Mhm.
funds too. So,
Yep.
and you shouldn't chase these quick
Mhm.
things,
Mhm.
because when you're in a early phase, it is
Mhm.
a good thing to invest in cryptos and stocks and shares,
Mhm.
but you
Mhm.
have limited income and investable
Mhm.
funds, right?
Mhm.
So if you have to invest a bigger amount, it is quite difficult. It
Yeah.
is
Yeah.
more like chasing quick money, like we
Mhm.
earlier discussed. You were telling
Mhm.
short term
Mhm.
ಅಲ್ಲಿ ಜಾಸ್ತಿ ದುಡ್ಡು ಬೇಕು. Short term
Mhm.
ಅಲ್ಲಿ ಜಾಸ್ತಿ ದುಡ್ಡು ಬೇಕು, I agree ಮಾಡ್ತೀನಿ. It is not that
Mhm.
I don't want money. I'll restrict myself from that. But you must also target on your financial goals,
Mhm.
right? And you
Yeah.
must always bifurcate between need and want.
Mhm.
Do you want it, or do you need it? If you don't need it, don't buy when you're young. Save
Yeah.
money,
Yeah.
save,
Amazing,
buy
bro.
bigger
Yeah.
things, buy
Yeah. Yeah.
assets
Yeah.
which will give
Yeah.
you
Yeah. Yeah.
more things,
Yeah. Yeah. Yeah.
right?
Lovely, lovely, bro. I think you're just telling every like person in between 25, that age
I know.
mindset. You're just telling it out, bro. I reflect on myself when you're talking. I'm like so many impulsive buys. So many
I
things
know.
every time,
I
and
have done those mistakes personally also. Personally, I have
yeah.
bought a watch which
Mhm.
I really don't use today, because I use it once in a while when I go out for some wedding or something. It looks good. I wear it like an accessory and go. But it
Yeah,
was
yeah,
not a need for me. I wasted
yeah,
money there. So it
yeah,
is
yeah,
not even giving me any returns there.
yeah.
So
Yeah, also, bro, since you touched up on this interesting topic of buying stuff or impulsive buying and everything, right now, if you see the era, for example, say people are earning salary and they're getting into their savings account, okay, and right now because of this kind of impulsive purchases and the amount of access we have on our phones to look at things and get things right, the amount of people using credit cards, bro. Right, like for example, I have 30,000 salary, but I have 1 lakh, 1.5 lakh credit limit.
credit
Okay.
limit.
Yeah. So see all these factors, like for example, okay, I don't have money in my account now. Savings bank, I don't have any reserve fund. Okay, but I have money
Okay.
on my credit card. If I see something nice, okay, I will buy it, and later to repay that, no, it is a big thing, bro. What do you want to tell
Struggle.
about this, bro? What do you want to tell about this? Should a young person who's starting up, building their finances from the scratch, right, earning very basic stuff, do you recommend credit cards, loans? If yes, how do we manage it?
Personally, if you ask me, I am against credit card. I keep telling credit card irbarad ನನ್ನ ಹತ್ರ. I always never want to have a credit card personally. But as a financial advisor, I recommend credit cards. But not for your expenditure as such. It is for you to build a credit score. Otherwise, your
Okay.
credit score will be at 1. When you go for loans, the rate of interest will be higher for somebody who don't have a credit score. So have a credit card. Don't spend more than 30% of your credit limit. That is one point. And second point is repay as soon as you get your pay. If you can't repay as soon as you get your pay of that month, it means you have done some faltu expenditure. It is out of your level. You're going out of your league and spending. I'll give you an example. This is an example for psychology and also money management. I have a friend who's been earning maybe around 50,000 ish, and he keeps telling I don't have money. He doesn't have any liabilities, and he doesn't have a commitment towards. He's not married, and nobody asks money in his family. His pay is 50,000, and he doesn't have money end of the month, and he uses credit card. So this started when he started earning. He started drinking. He started consuming alcohol. So because he has money, baro maga party madana, maro maga party madana. What was just for fun became a habit. Now there are two habits he's not able to stop. One is alcohol. The second part is spending. See, if he wants to buy alcohol on a daily basis, he must have income. If his income is not there, he is swiping his credit card. He had a credit card limit of 1 lakh rupees, and it is always at max. So it is a cycle, right? Maybe once you max out the credit limit, next month your pay is 50,000. How will you clear 1 lakh rupees? You can't do it, right? So that is how he is in a debt trap. So right now he is in a phase where he has to quit alcohol slowly, and he also has to stop spending on alcohol and other things slowly. So your health and wealth is affected. Because you had the freedom of spending the credit card. If you didn't have the credit card, and if you would have invested some money, would you have that much money to spend unnecessarily?
No.
Right. That is why we ask everybody to invest and not do impulsive spending, and use your credit card responsibility. Don't spend more than 30% of the credit limit. Actually, for me personally, don't use credit card. Maybe in some cases, my client has, one of my client has a PVR linked credit card. I exactly don't know which financial institution. So anytime they spend, they get free tickets. So in the month of March itself, they had spent around 2 lakh rupees on the card. They got around 16 tickets. So it is a huge saving for them. And he repays back the credit card every month. And he doesn't spend too much also. All his groceries, he orders online. So everything comes online. He spends on the credit card. He immediately repays. He doesn't wait till his paycheck also. So that is how you must maintain that credit card expenditure. And don't have too many credit cards also. There is one more category who pays credit card through credit cards. That is,
bro, I've seen people, bro. They'll be like, okay, I have 2 lakhs personal loan. This is coming on neck. I'll take another loan. I'll pay this loan. I'm like, that is the most shittiest thing you can do, bro. Taking credit for credit.
Credit. So basically, you're in a debt trap. So if you're in a debt trap, what happens? The only option you have is to increase your income. How do you increase your income if you're a salaried? You must wait till your appraisal. Do you have so much time and money to wait till your appraisal? No, right? So you must be careful while making debts also. That
very
is
well said, bro.
And there is one more category, I'll tell you. There is one set of people who uses credit card just to buy stuff to show off.
Yeah.
He has this, I also want to buy this.
Yeah.
There is one. There are people who go for loans because my friend bought a car. I don't have a car. I can't meet his level. That is like the most pathetic mindset a person can have buying
Yeah.
anything, maybe a car or a house. Because
Yeah.
there are few clients who still are in a rented house who are a VP of a company. We asked them when we were consulting, and we usually recommend not to go for liabilities, not to go for home loans if they have a very good income, and in the next 5 years they can accumulate good amount of income and invest and make money and then buy that housing property. Then delay by 5 years is what we recommend. So that client kept telling, no, all my colleagues have their own house and other things. The question we asked was, yes, all your colleagues have own house. How much EMI do they pay every month? Are they peaceful? When you walk into your house, you shouldn't be like, okay, next month my EMI is going out. I have to pay 60,000. Are you peaceful in that house? Your own house. Acha, your own house, great. But are you peaceful? That is the question you must ask. You go for a bigger house, you rent out a bigger house, no problem. When your income level is higher, invest, accumulate, and buy your own house. You buy it with pride, right? See, there is India li ಹೇಳ್ತಾರೆ, when you buy a bike, first question they ask, EMI or own cash? That's this question, right? So when you buy with cash, how grateful you do. No, full cash appa. So how do you feel? The feel is different, right? So when you buy such things, you must have that feel. ಇಲ್ಲಾಂದ್ರೆ ಅಯ್ಯೋ EMI ಹೆಂಗೋ ಕಟ್ಬಿಟ್ಟಪ್ಪ, EMI ಎವ್ರಿ ಮಂತ್ ಇದೊಂದು ಕಷ್ಟ ಆಗ್ಬಿಟ್ಟಿದೆ. You should be happy with your investment and your purchase also.
Yeah.
Right?
I think, bro, it is, like most of the people, currently at this era, right, are falling in the trap of whatever you touched upon right now. Our hatra ide anta nanu tagonodu matte credit loans. That I think is a trap, bro. And majority of people are falling into that trap. That is why I think, like people, again, bro, as we spoke in the beginning, this financial planning and financial freedom or money is a mind state, bro. Like you have to, it has to come out from your brains, and you have to do it and follow it consistently to, I think, like get where you want to, right?
It's like going to a gym, bro.
Yeah.
If you don't go consistently, you will gain weight. And the timeline of gaining weight, right, is quicker than if you wouldn't have worked out earlier. So you must be consistent. It is financial fitness.
Financial fitness. Very well said, bro. And bro, like, see, what do you think are the top 3 habits which can ruin the financial health, bro? Like, since we spoke about so much, can you just name one by one top 3 which can ruin, like...
Okay, top 3. Impulsive buying, first point.
First one.
When you're young, you have money, you feel that you have to buy something. Second thing, not tracking your money. Where my money is going. See, a lot of banking applications. Since in India, everybody is using UPI. All payments are made through UPI. Most of them. Cash expenditure is lesser. Many banking apps have this tracking on how much you have spent on each thing. The better way to do is 6 months. You track each and every expense. You pay 20 rupees in a tea shop, you track it. You note it down. 6 months. And you also set limits on how much I am going to spend on each of the sections. And more than that, like I said earlier, more than that, you don't go to spend. And second thing, you will understand where am I spending more, where I shouldn't have spent. So it is a self-realization more than anybody telling, or advisor telling, or your parents telling. A lot of parents keep telling, this guy keeps going and buying things he doesn't want. Duddin value gottilla, he doesn't know the value of money. I don't know what he's doing. He's not saving anything. All these things. Self-realization is the best realization, right? So you track it down for 6 months. 7th month, don't track. Your mind will automatically keep tracking. Okay, this is the limit I spent. I'm not going to spend more than this. So in that 6 months, make a commitment of investing. So that is the second point. And third point is comparing finances with your friends or family members, because each person's financial situation, financial health, financial goals are different. Financial
Yeah.
goals is the main point, because
Yeah.
somebody will want to buy a house, the other person will want to buy a commercial property, rent it out, and earn income out of it. There might be another section where he wants to invest only virtually. He doesn't want to have any physical asset. I will stay in a rented house. I'll keep investing in all stocks, mutual funds, crypto, everywhere, and create a huge wealth. And at once buy something big. So
Yeah.
everybody's financial goal is different. Some
Yeah.
people might have married in an early stage. There are friends of mine who married when they're 21. Just after degree, they got married without even having a job.
Okay.
And 4 years down the lane, they have kids also. So the financial goal due for the child's higher education is in 18 years. For somebody who's not married even today or even at the age of 30, their financial commitment towards their future kids, who are the unborn kids, is a long way.
Yeah.
It is very far away.
Yeah.
So the
Yeah.
financial goal is different. The timeline is
Yeah.
different. So never compare your finances, and don't complain about your financial situation.
Yeah. Yeah. Yeah.
You feel bad about your financial situation, think for yourself. Don't go telling ಜಾಸ್ತಿ ಲೋನ್ ಆಗೋಯ್ತು ಗುರು, ಜಾಸ್ತಿ ಕಮಿಟ್ಮೆಂಟ್, ಜಾಸ್ತಿ ಖರ್ಚು, ನನ್ ಮದ್ವೆ ಆಗ್ಬಿಟ್ಟು ಹಿಂಗಾಗೋಯ್ತು. Don't complain. You know your financial situation. Work on earning more.
Yeah.
Why
Yeah. Well
are
said.
you comparing and complaining? Somebody bought a bike. Oh, that guy bought a bike. See, I'm still having such a bike. It is 10 years old. Come on, he has a different income level, or
Yeah.
he might be spending less.
Yeah.
You might be spending more and you are not saving enough. So
Yeah.
don't compare. These three are very important. The first thing is impulsive spending. Second thing is tracking. And third thing is comparing finances with your friends and family. Huge mistakes.
Yeah. Very well said, bro. I think, like, people like you, like, I think I have to talk to people like you to, keep reminding myself what I'm not to do. It is crazy, bro. Like, see, we are just talking about the things which is happening around us, bro. Like, because
Correct.
I see a lot of people fallen into this kind of trap, like, as you mentioned, the three main financial mistakes, right? The
Yes.
majority of the people at this 20s or early 30s have fallen into this trap, bro. So
Correct.
the main agenda for me was, like, to remind people, because if you remind, they'll
Correct.
at least start thinking, bro. If someone doesn't tell them, right, they'll again
Correct.
be stuck there. Because I've seen a lot of people, as you told me examples, right? Ee tara
Yes.
ಆಗ್ಬಿಟ್ಟಿದೆ, ಈ ತರ stuck ಆಗ್ಬಿಟ್ಟಿದೀನಿ. They'll keep telling, ಸ್ವಲ್ಪ ರಿಮೈಂಡ್ ಮಾಡಿ, okay, ಈ
What
ತರನೂ
are you doing
ಮಾಡ್ಬೋದು
about it?
ಅನ್ಸ್ಕೊಂಡ್ರೆ. Yeah. Action, like, act towards it, so everything gets
Correct.
better, right? So I
See,
think you have
Abhinav,
given
there
us,
is there is one more very important point. See, I started earning in a later stage after my degree and other things. There are people, take for example, you started earning when you were in college also. You were taking care of your own expenses, right? Which is a different thing. See, I was dependent, but you were independent quite earlier, right? So comparing my finances with your finances is a joke.
Yeah.
Right?
Yeah.
Because
Yeah.
I was dependent for a very long time. You were very focused on your career and you wanted to do something on yourself, so you did it, and you were passionate about it.
Yeah.
So
Yeah.
responsibilities to people come in different stages. You became responsible when you were younger than me. I became responsible on later stage. Some people become responsible when they're 30 years old. So don't compare.
Yeah.
Right.
Very well said, bro. I think we have touched upon all the points, like, majority of the points what, layman, or a normal person needs to know about finances, how to plan their finances, and the
Correct.
mistakes which we do, and how we
Often.
can, often, and how we can correct ourselves and go to the right path.
Correct.
And also, guys, please reach out to Harshit. He's the best. We have spoken so much about it. Since I know him personally, I would say he's the best person to get financial advice from. I know initially it is too difficult to like, get into that zone of thinking and take
Correct.
decisions, but then keep talking to him, or I know you definitely are there to help people out who wants
Definitely.
to help, right?
See, that is the main thing. See, 30 years ago when dad started this business itself, we started with free financial advisory. 30 years ago, he had that vision that India will not pay for financial advisory. First thing. And second thing, he found a way where we can earn out of it, even when we are giving free financial advisory, because somebody spending money to understand on how much to invest on their earnings is a little challenging in India at
Yeah,
this
yeah,
point, because
yeah.
hardly there are few people who are ready to pay for it. There are clients who come in, they book appointments and come into our office, and they ask how much you charge. Usually it is a no. We usually tell no. So at that point they're shocked, because the
Yeah,
amount of time they spend. We in the weekends we take only 2 meetings.
yeah.
In weekdays we take 3 meetings too, but in weekends whoever is coming, usually they're very busy and the financial portfolio is a little bigger. So
Okay.
it is very nice, and
Yeah,
every client is a learning experience even for us,
yeah,
because
yeah,
when
yeah.
they come up with different financial situations, we give a different set of solutions. Sometimes it happens over the table, sometimes we take a little time, because it is not that we know everything. As financial advisors, people think we know everything in the financial market. It is a lie. We also consume knowledge on a daily basis. Every day there is a new change, right? So they must have an open mind to come and listen. And first 1 hour we teach on how your finances should be, which place, how much you must be investing, how much of reserves you can have, how much of life insurance you must have, how much risk area you must invest in, the risk appetite we analyze, and we also analyze on the expenditure patterns. Right
Yeah.
till today, we have not asked 98 to 98 99% of our clients, we have never asked them to change their expenditure pattern. We have only asked them to change their investment pattern. So that is how we do. We don't keep telling. There are few advisors who tell whatever investment you have done is a wrong move. There is no
Yeah, yeah.
wrong. There is no wrong financial investment or financial instrument. Every financial instrument has its own purpose. It's about
Yeah,
finding the right match, and that is what
yeah.
we do.
Yeah, amazing, bro. It's amazing. Also, like since I mean, like you gave us a lot of idea about investments and everything, right, bro? Like, see, people who knows about a lot of things, like you personally channelizing us to the right ways. But if you see on the larger perspective, right, like the news, the media, what it shows is like, see, for example, right now there is
Correct.
stock market crash happening. Okay,
Correct.
which is again like for a layman or a lay person like me, I'll be like, okay, stock market crash ಆಗ್ತಿದೆ. Is this the
Huh.
right time for me to start investing? Or what do you want to tell about this, bro? Like the global, what is happening on
Okay,
the stock
the
market
global
thing.
the global tension is very high at this point, but various different levels, right from our independence as a country. No, I'm not talking about the 1947 independence, the financial independence and the manufacturing independence that we have gained as India, as a country, is huge. So
Yeah, yeah, yeah.
and second point, whenever there is a market fall, right, you should be very happy.
Yeah, yeah, yeah. Because it again raises back. Yeah.
So anytime the market falls, there are a few clients who panic and call or messages me on WhatsApp. First thing I tell, don't worry. If there is a market crash, you must be very happy that you can invest more. And when the market recovers, you will
Recovers, yeah.
recover in a very huge way. That is very, very important. Like I earlier said, whenever there is a 10% correction, there is a 15%
15%
gain.
return. Yeah, yeah, yeah.
So
Yeah.
when earlier we had a 3,000 points crash on a single day, we recovered in just two market sessions. So it is a
Lovely.
great recovery, and there is one more reason why the market fell earlier. I'm talking about from January to March. What happened? Foreign institutional investors left the Indian markets.
Yeah, yeah.
If they actually, even though they left, we didn't correct by like 20, 30 points, 30,000 points. We corrected only by say 10,000 points, and we are in a road of recovery. What I have to tell is the Indian retail investors, I'm not even
Retail.
talking about the
Okay.
institutional investors, the retail investors have become so powerful that they can keep the bulls active.
Okay.
They can keep the market rallying, because the number of people who are investing in mutual funds have
Mhm.
increased, through which
Mhm.
domestic institutional investors,
Mhm.
asset management companies are capable of
Mhm.
investing more,
Mhm.
and the investment power of many individuals have increased.
Yeah.
So that is how the Indian markets are working. And
Mhm.
the manufacturing sector has seen a huge growth,
Mhm.
especially because of a lot of schemes like Startup India,
Yeah.
Atmanirbhar
Mhm.
Bharat scheme, and
Mhm.
the amount of loans they have given to female entrepreneurs is very, very good under
Yeah.
the
Yeah.
Startup India scheme.
Mhm.
We have
Mhm.
seen so many women entrepreneurs come up. See, women
Mhm.
entrepreneurs are very capable because
Yeah.
there is a psychological paper which
Mhm.
says
Mhm.
women
Mhm.
think three
Mhm.
years ahead of men.
Yeah. 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 That I think is psychological thing, bro. Yeah.
Which people don't agree. A lot of
Yeah.
men
Yeah.
don't agree, but
Yeah. Yeah.
actually, it is
Mhm.
true because
Mhm.
you
Mhm.
might have usually seen
Mhm.
mothers having a future vision. What
Mhm.
might happen in the next 2 years,
Mhm.
1 year? They
Mhm.
keep telling
Mhm.
"Idadre
Mhm.
hege." Mothers,
Mhm.
when it comes to your partner, also they keep
Mhm.
telling you
Mhm.
must be prepared for this. You must be
Mhm.
prepared for such and such a situation.
Mhm.
Why?
Mhm.
Because their thinking is ahead.
Mhm. Mhm.
Same mindset, them applying it to business. Imagine
Mhm.
that.
Mhm.
So because of all such very good things,
Mhm.
we have a strong growth story. India
Yeah.
as a
Yeah.
country has
Yeah.
a
Yeah.
very good growth story.
Mhm.
And looking at the IPOs, the initial public offerings,
Offerings. Yeah.
maybe it is not at the level at the level where it was
Mhm.
listed,
Mhm.
but
Mhm.
so many companies are willing to get listed.
Mhm.
So many
Mhm.
companies are ready to show that my company, my
Mhm.
business
Mhm.
is compliant with the SEBI guidelines,
Mhm.
because SEBI
Mhm.
audits, right? Once you're
Yeah.
listed, the audit is even more
Mhm.
stronger. So
Mhm.
they're ready to work on such a way. So
Mhm.
even if you invest in stocks, you don't get
Mhm.
scammed. See, earlier
Yeah.
when
Yeah.
we saw the Harshad Mehta
Mhm.
scam or
Mhm.
any insider trading situations for that matter,
Mhm.
people were very afraid. But right now, the regulations are becoming stricter and stricter,
Yeah.
not only for the
Mhm.
companies, even
Mhm.
for the investors.
Yeah.
A very small thing.
Mhm.
There is a difference between the name and the IT records and the PAN. Your KYC
Mhm.
will not go through, and
Mhm.
you can't invest.
Mhm.
So that is the amount of scrutiny that the board,
Mhm.
the institution is
Mhm.
doing, the regulator is
Mhm.
doing. So you must
Yeah.
be
Yeah.
very happy about it. And any market crash will have a recovery. You should never
Mhm.
forget. 10 years ago,
Yeah.
was the market at this level?
No.
10
No.
years
Not at
later,
all.
well, will the market still be at this level? If
No.
the
No. No.
market
No.
is
No.
still at this level,
Yeah.
there
Yeah.
are so many people who will not have jobs.
Yeah.
So
Yeah.
there will be a recovery. See,
Yeah.
US became a developed nation
Mhm.
very long back. Even
Mhm.
then, the market kept rallying, right? So we
Yeah.
are still developing and in a very good growth phase. So
Yeah. Lovely.
we are one of the best economies in the whole world today.
Yeah. Yeah.
So India, investing in India is very good. As Indians,
Yeah.
investing in India is great.
Yeah, lovely, bro. I think you touched upon all the important aspects, bro, when we started talking about the stock
Correct.
market segment, right? Because I had a lot of questions related to this. The first thing was,
Correct.
why there is the fall in the Indian stock market, and for young investors like us, like obviously, like you start investing now and you see the market is falling, it is like a tension, bro. Like ಏನಾಗ್ಬಿಡುತ್ತೋ, ಹಣಕ್ಕೆ ಏನಾಗ್ಬಿಡುತ್ತೋ,
See,
all that things will
it
come,
is
bro.
in a negative, right?
Yeah,
See, the day you purchase,
yeah,
the market
Mhm.
falls, it is in a negative.
yeah,
So, as investors, especially in the
Mhm.
mutual fund market,
Mhm.
as
Mhm.
investors, what you must do
Mhm.
is
Mhm.
don't look at the market every day.
Mhm. Yeah, yeah.
It is not your marks card. It is not that you have a
Mhm.
unit test. ದಿನಾಗ್ಲೂ correct ಮಾಡ್ತಾರೆ, marks ಕೊಡ್ತಾರೆ. It is not like that. It is not like a unit test. Once
Yeah,
the
yeah,
marks are given, it is over. It will recover.
yeah,
You should enjoy.
yeah,
See, you have fun in a roller coaster. Same way you
yeah.
must have fun in the investments
Yeah,
also.
yeah. Lovely, bro. I think we touched upon all the important aspects, bro. Last, like I'm trying this for the first time in Old Radio. I have a few rapid fire picks for you, okay? So
Okay.
I just want you to choose,
Got it.
I mean, it is not like an option. I'll ask you something. The first thing you get on your mind, or
All right.
just
All
just tell
right.
me. It's all in financial aspects, okay? So let's
Okay.
start off with the first thing, bro. It is the best app for tracking my expenditure.
I don't use any tracking things. It is only Excel.
Okay, fair enough.
Excel is the best because you can do anything with Excel and calculate however you want. And basics of
Okay.
Excel, most of the graduates know.
Yeah.
Right?
And one book you would recommend, to learn about money, investments, or
Think
the
and grow
discipline.
rich.
Yeah, amazing. And SIP or a lump sum money investment.
SIP. I will give
Yeah,
you a
any day.
great line I learned from a very amazing person. Time in the market is better than timing the market.
Amazing. Well said, bro. Well said. And thoughts on crypto for young investors, bro.
It is not regulated. If you're young and you're not keen on, you're very keen on not losing money, it is fine. You're okay. Okay, even if this money goes, I'm not worried, you can go. It is not regulated. That is the major challenge as of now.
Mhm. Lovely, bro. And renting or buying a house, what makes more sense?
If you have a good amount of money and you're young, you have enough money to invest on a home, invest first. You stay in a rented house, do a minimal living for quite a amount of time, and invest. Accumulate at least 50% of how much you want to buy or purchase a house or a flat, whatever it is. Only after that you invest.
Okay.
You can go for the other 50%. You can go for a loan and EMI, so that you're
Lovely, bro.
financially. See, I'm working more on how peaceful you can. Financial freedom is one way to define that.
Yeah. Lovely, bro. And if some listeners are listening to this podcast till the end and want to start right now, after listening to our conversation, if they want to start right now investing or taking their financial goals seriously, what are the first 3 steps they should take today, bro?
Today, first
Yeah.
thing, write your income, write your expenditure, and account it. Make a list and find out what mistake you're doing, where you're overspending. And third, if you think you're really overspending and doing impulsive purchase, 1 month don't go out and remove all your shopping apps from your mobile right now. Don't enter any shopping apps. Then after 1 month, it becomes a habit. You'll
Lovely.
see the taste of not spending
Yeah.
unnecessarily
Yeah.
in 1 month for sure.
Yeah.
It is like
Yeah.
quitting sugar, bro. After quitting
Lovely,
sugar
bro.
for 1 month, you see the returns, right? You feel good, right?
Yeah.
Same way in finances also.
Well said, bro. Well said. I think that is the end of that part, bro. And where can people follow you or reach out? If they want any help, you want to give a heads up or give a shout out for yourself.
Okay.
Yeah.
So, first of all, I have a finance related account. There is fin.harshit. You'll find me on Instagram at this point. And on LinkedIn, I'm Harshit Govindas. You can message me on LinkedIn also. And otherwise, as a firm, we are Kaveri Associates LLP. You can find us on Google and all social media platforms on Instagram, Facebook, LinkedIn, Twitter, on all platforms. We are pretty much active and we will reply to your messages immediately. And on Google, we also have a call action button. You can call, even on Instagram, you can call us and contact us. And you can have a very commitment-free discussion. That is for sure. If you have a discussion, I will follow up. It is not that I will not follow up. I will not spam you. And if you tell, no, at this point, I don't want to do, I'll delay it by 6 months or maybe 5 months or a year, I will not say anything. I'll be happy to do it. I will be happy to even give you recommendations on why you must delay or why you must not delay. So you can contact me anytime, and we have other experts also in our office who will guide you in a different manner. And it is not that we only do mutual funds or insurance. We are into real estate investments also. Not like a real estate broker. Some people know fractional real estate commercial ownership. All these commercial buildings are very expensive to own, right? We are associated with firms where you can own a fractional amount of commercial real estate.
Interesting, bro. Interesting.
That is a great thing. And there are bonds which, take for example, you have 1 lakh, 2 lakh rupees, but you want that money after 18 months or 24 months, but you don't want to leave it in a savings bank account. There are bonds or commercial papers where you can invest. We are in all of it except for stock trading. Stock trading we don't.
Okay.
Other than that, we do all the other things, including financial planning as a whole.
So I think our listeners got to know where they have to reach out. Please go
Hopefully.
bombard Harshit. Yeah. Bro, as per I know, you are the best person, bro. Like, see, as you like told that commitment free, like
Discussion.
consultations and all. See, I came to you. Remember, I came to you and
I
stuff.
know.
Yeah, we planned a lot of things, and once I got here, like everything is going opposite, bro. Trust
I
me, like
understand.
it is going in a different direction. I'm like, okay, I
See,
will need some time and stuff.
I didn't come and ask you about it because
Mhm.
I had a feeling, because
Mhm.
you were very serious in the discussion on
Mhm.
making sure your finances and financial goals are met. Since you didn't get back, it means that there is some hassle. You are
Yeah,
in some different zone
yeah,
where you can't
yeah,
start your investment.
yeah,
So it
yeah,
is a very good thing that I wait and
yeah,
not talk about it. If I talk
yeah,
about
yeah,
it, it is going to stress you again. Okay,
yeah,
I
yeah,
thought of investing after
yeah,
coming
yeah,
here. I'm not able to
yeah,
invest. It is
yeah,
a financial pressure and
yeah,
psychological
yeah.
pressure. Indirectly, I am creating. I
Mhm.
shouldn't be doing something like that.
Yeah. Lovely, bro. Thanks a lot for that first thing. Thanks a lot, like for taking that into consideration. And do you have anything else to like share, bro, before we wind up? I think we've spoken
Okay.
for a lot of time already. Do you want to like share anything else before we
Okay.
wind up?
One very important thing that I want to tell is
Mm-hmm.
always create reserves at least 3 months of your
Mm-hmm.
family expenditure or your personal
Okay.
expenditure plus
Okay.
3 months of EMI. This is
Mm-hmm.
a very important thumb rule we tell to
Mm-hmm.
all our clients. Minimum, maximum up to 6 months.
Mm-hmm. Mm-hmm.
Why? Because earlier to COVID, we kept telling this to clients. They
Yeah.
were, after the discussion, if it was my friends, they were laughing at me
Yeah.
before
Yeah. Yeah.
COVID,
Yeah. Yeah.
and
Yeah.
our clients wouldn't comment because we
Yeah.
have a professional
Mm-hmm.
relationship. They,
Mm-hmm.
they can't joke about me, right? So
Mm-hmm.
they would keep quiet. They never used to comment on that. But when
Mm-hmm.
COVID hit, a lot of them who were
Mm-hmm.
into business,
Mm-hmm.
they when we spoke the next time, they said, "ನೀನ್ ಹೇಳಿದ್ದು correct ಅಷ್ಟೇ. Whatever you
Correct.
said
Yeah.
was the right
Yeah.
thing.
Yeah.
If
Mm-hmm.
if I wouldn't have made that reserve, people who
Mm-hmm.
made the reserve told that
Mm-hmm. Mm-hmm.
if I wouldn't have made that reserve, it would have become challenging. And people who
Yeah.
didn't make the reserve, they regret
Yeah.
it. So
Mm-hmm.
always have the financial reserves.
Mm-hmm.
Don't borrow money unnecessarily. If it
Mm-hmm.
is very needed, only then you
Mm-hmm.
borrow money.
Mm-hmm.
Otherwise, don't borrow money. You will get
Mm-hmm.
into debt trap without you
Yeah. Yeah.
knowing. That is why it
Yeah.
is called
Yeah.
a trap, right?
Yeah.
Without
Yeah.
your knowledge,
True.
you're
True.
getting trapped. So
True. True. True.
and start investing. Start investing.
Yeah.
Even if you have 1,000 rupees, start investing that 1,000 rupees.
Mm-hmm. Mm-hmm.
Maybe one day you will start investing 1 lakh, 2 lakh, 5 lakhs. There are clients who
Yeah.
invest 8
Mm-hmm.
lakh rupees per month. How?
Amazing.
Because their
Okay.
income has increased. It is not that
Mm-hmm.
today you have less money, tomorrow also you'll have less money.
Yeah.
There
Yeah.
is a timeline where
Yeah.
you will have huge
Mm-hmm.
money, right?
Mm-hmm.
So you
Mm-hmm.
must allow your money to earn money.
Mm-hmm. Lovely,
And
bro.
the last line that I have to tell is the key to making money is to stay invested.
Yeah, lovely, bro. I think it was a very informative session personally for me. Like again, you told me a lot of things which I'll reflect on or think of on everyday basis, bro. Thanks a lot for your time.
Thank you so much for
Yeah.
this opportunity.
Yeah,
Because
yeah, yeah.
why is that so many points we don't
Yeah.
get to tell it often, right?
Yeah,
When you
yeah,
ask such questions, I will be able to tell it out,
Yeah,
and
yeah.
it is something that I can take out of me and tell it to somebody and share it, right?
Yeah,
It is so nice. Very
Yeah,
rarely
I know,
people
I know.
listen to people, right? Because
Yeah,
you know
yeah,
how
yeah.
people are there. They
Yeah,
want
yeah.
quick knowledge, quick money. Everything must have, like quick commerce. Everything must happen quickly.
Yeah, yeah, yeah.
But so it is good that you're giving this much amount of time for me to talk. You didn't
Lovely,
rush
bro.
anywhere. You didn't rush
Yeah,
anywhere.
yeah.
I'm
Yeah, yeah.
really appreciating that.
Yeah, hope you had a nice time being on the show, bro. Let's probably
Yes,
get
yes,
in.
yes.
Let's do another session soon. Like
Definitely,
we'll
definitely.
plan on something interesting and do soon. Do a session soon. And
Definitely.
also all the best for your new Instagram. For your account, what you have created.
Thank you so much.
Yeah,
It's
yeah.
been pending because
Yeah.
our social media team in the firm and my closest friend keeps telling, in finance account separate, man. Because I'm also a percussionist, right? You
Yeah,
start
yeah,
your
yeah,
finance account separately and start making videos. I think this is a very good start for me. Because
lovely.
me facing the camera, I get conscious. But video
Yeah.
calls, I'm used to it because I
Yeah,
keep
yeah.
talking to clients, right? This is a very
Yeah, yeah.
good experience for me as a
Yeah.
speaker, and you
Yeah.
have been a great host.
Thank you,
to
bro.
be.
Thanks a lot.
And
Yeah.
the platform that you're using is like very
Mm.
premium. I think I don't
Yeah.
know about these
Yeah, it
platforms,
is.
but it is
Yeah,
very
it is really
premium.
nice. Yeah.
I was
Really
just
nice.
going through the options available, and it's
Yeah.
very nice.
Yeah, all again. Shout out to my man Dominic. He found us this. He
Okay,
found us
okay.
this. Yeah. He gave us an idea, so we
I
are
have
here,
to
bro.
convey my regards to him, especially when I keep seeing your videos, right? I keep feeling, "Ee tara ond editor beku. I want an editor like this." I keep telling, one of the showreels you had, right? The
Yeah.
Mysore gigs showreel. I
Yeah.
kept showing, "Nod engide nodu. That was my feedback that day. I was showing my friends, my brother
Lovely,
also.
bro. Yeah, lovely.
So
Thanks a
it
lot,
was
bro.
good.
Thanks a lot for your kind words, bro. It really, means a lot to us. And again, it pushes, one step higher for us to do things, bro. Because
Oh,
I need
okay.
someone like you telling me, you're doing something crazy. Keep doing it. That's what I
Bro,
need.
it takes a lot of
Yeah.
courage to do
Yeah.
this, bro. Honestly,
Yeah.
I
Yeah.
wouldn't have done it
Mhm.
without you approaching me, right?
Mhm.
So this is
Mhm.
a very new experience for me, and it is a
Yeah.
very
Yeah.
fun experience for me.
Yeah.
It
Lovely,
is.
bro.
I loved it, bro. I loved it.
Amazing,
Honestly,
bro.
I liked it.
Amazing, bro. Have a
Yes.
nice time, bro. Sigana bega. Let's
Sigana, we'll
catch
plan
up.
it out. I
Yeah,
have
we'll plan.
one more concept in my mind for a
Yeah.
podcast itself.
Mhm.
I'll get back to you. I'll get back to you
Yeah,
on
for
that.
sure, bro.
I'll
Any
just
day,
talk to
any
my
day.
team also.
Yeah.
I'll just talk to them on how we can contemplate and again
Any
collaborate.
day. Yeah,
And
any
we
day,
will
bro.
sort
Hit
this
me
out.
up. Hit me
Sure,
up.
sure,
We
sure,
will,
definitely.
yeah, do it. Yeah.
Yes, bro.
See you,
Thanks.
bro. Then take
I,
care.
I had a great
See you
time, bro.
soon.
Honestly.
Yeah, lovely, bro. Yeah.
So, first of all, I have a finance related account. There is fin.harshit. You'll find me on Instagram at this point. And on LinkedIn, I'm Harshit Govindas. You can message me on LinkedIn also. And otherwise, as a firm, we are Kaveri Associates LLP. You can find us on Google and all social media platforms on Instagram, Facebook, LinkedIn, Twitter, on all platforms. We are pretty much active and we will reply to your messages immediately. And on Google, we also have a call action button. You can call, even on Instagram, you can call us and contact us.